Unlike the last couple of weeks, which have been dominated by figures showing the economic cost of the coronavirus, this week is comparatively light on top-tier data. That is, bar Thursday's unemployment claims reading. A couple of weeks ago, it was revealed that for the 7 days to March 21st, a record 3.28 million people in the US had filed for unemployment, a figure almost 5 times the worst number seen during the financial crisis. Just 1 week later, that history-making figure was blown out of the water. For the period ending March 28th, a further 6.648 million Americans had put in jobless claims. That's close to 10 times the size of the 665,000 Great Recession peak seen in March 2009, and the long-held 695,000 all-time record set in October 1982. Effectively 10 million people unemployed in the space of a fortnight. And yet, though the markets did have a bit of a wobble after both sets of numbers, on each respective day equities ended the session in the green. There are arguably extenuating circumstances for each. On March 26th, investors were distracted by the confirmation of the $2.2 trillion US stimulus plan, whilst on April 2nd, Trump drew focus by stating Russia and Saudi Arabia were close to ending their oil price war. But can investors stomach another multi-million claims reading this week, especially after news that the US economy shed 701,000 jobs in March, according to the most recent non-farm numbers? And that's a figure taken in the middle of the month, mind. Again, though, it is important to note that the markets didn't freak out at that unprecedented non-farms figure, even if they did close that Friday in the red. In terms of this week's unemployment figure, analysts are expecting another 5 million claims, though if you look at the huge gap between estimates and the eventual readings on the last couple of weeks, that number could be a lot higher. Either way, it is another gruesome number, one that keeps the US on track to reach the 20 million further job losses analysts have floated across the coming weeks. Beyond that headline unemployment claims announcement, there's the JOLTS job openings number on Tuesday, the Fed meeting minutes on Wednesday, which could be crucial in indicating what the central bank has in store in the next coming weeks, if it has got any more, how much more it's got in its arsenal after the amount of rate cuts and various new plans it's announced in the last month or so. Then the PPI and consumer sentiment figures on Thursday, and then the inflation data on Good Friday, the US sort of being the one major Western area not taking Good Friday off in terms of trading. As for the Dow Jones itself, the index seems to have found a home between 21,000 and 22,000 in the last week or so, even if it has arguably had reason to plunge out of that bracket on the back of those aforementioned jobs figures. It appears that investors have repeatedly taken the view that the horrific jobs data will only prompt the Federal Reserve and or the US government to instigate another round of stimulus on top of the rate cuts and multi-trillion-dollar packages that have already been announced. The longer neither central bank nor Trump does do that, however, the harder and harder the Dow Jones might find it to weather the storm of its ever-growing employment crisis, especially if you see another sort of record-breaking figure on Thursday. On the flip side of that, say if that figure does come in at the 5 million mark, that is a significant reduction on the 6.6 plus million figure seen last week. And that may in and of itself be taken as a positive if it does seem that the unemployment crisis is sort of slowing week on week, especially if that goes alongside a slowing number of new coronavirus cases. However, given that the US seems to be dealing with the coronavirus situation in terms of the actual health situation the worst, and that is now far and away the worst country in the world, those kinds of alarming coronavirus numbers may also help weaken the Dow Jones as the week goes on. Though, like I said, the Dow Jones has proved to be fairly hardy and fairly sturdy in spite of some ugly figures, both jobs-wise and coronavirus number-wise, in the last couple of weeks.